Hello and welcome to Smart Investing. This video is going to be about the banking sector. So I'm going to continue with just 5 stocks. I'm going to make this a very quick and short video. And again, it's only going to be 5 stocks in the continuation of the video for the banking sector. So the first one that I have is TSCAP. I don't have the full name for you, but I will have it in the description, so please bear with me. I believe it's called Tri-State Capital Holdings. Let's see what they do. So they're a Pennsylvania chartered bank, and they do commercial and private banking. It doesn't say exactly what they do. Okay, it says they include loan and deposit products, cash management, and capital market services. They do interest rate swaps and investment management products. So let's read here. So they hike dividends, announcing buyback plans. That's for probably something else. So I'm just going to do a quick overview. So they do pay dividends for this stock. Let's look at the 1-year chart. Not much of a gain from 25 to about 27 and change for the year. And let's see if they have any splits. So no splits. Let's look at a more detailed chart on that. No, I thought sorry. So TSCAP, TSC, there we go. I don't know what's going on today. Fingers are butterfingers today. So yeah, let's look at the 1 year. Let's look at the 1 year. So they're across the 200. So it's below the 200. So again, it's just not a. Just in my opinion, I don't think it's a good stock. There's not much of a range on it. Again, not even $2 worth of gains, and this is throughout the whole year. And that's all I can say. Even the dividends, again, it's not even worth it. See, if this stock, if it'll only go up a few dollars, even if it just broke to new highs, then that's a start. It don't even have to gain that much. It's only like, and it's crazy because it's only like a $2, not even a $2 difference. And just with that alone could be start of a trend. And once it breaks that new high and then give it a few months, that's it. Then it might get some more views and looks on the chart. But it doesn't seem like an active. It just looks like crap. I'm sorry. It doesn't have any activity. Yeah, it's a nice market cap, 34 billion, but there's just no activity on it. It doesn't look that popular or anything at all. So moving on to the next one. BHB. Another crappy stock. So we have, well, not too bad. So in February this year, went from 21 all the way to as high as 32. I mean, it's had some movement, but it needs more movement. It needs to break new highs again and again. Another stock to just emerge from, staying in the same range for so long. It just needs to break out these levels. It's just not a favorite pick. It's all a matter of these capital firms and all these institutions just investing and picking stocks. It's just, whatever. They just pick what they pick, and whatever's getting picked, all the money involved in it and the activity, that's pretty much it. It's just whatever stock gets picked, and it goes up. That's all it is. So they have raising dividends. Now, do they have any splits? Oh, yeah, they do. So I'd stay away from that. I wouldn't mess with it. Let's see where they're located. Oh, they're in Maine, a Maine chartered non-depository trust company. So again, they're still in that same range. So the stock is pretty horrible. I wouldn't touch it. It's not all that. But let's look at the chart. The 1 year, it's gone up. So if you bought in February, if you bought in the low 20s, even now you had a bunch of time to even decide if you want to sell. So basically, anytime after March. So even after under 30, well, let's say even after about $28, if you bought anywhere under $28, you had a really good chance to sell above that and collect the dividends. So I think that's a good buy point. So it's almost reaching 28. And you can see it's under the 200. So it's under the 3 lines. And again, I'm trying to pinpoint it to see where it has gone under for the year. More or less a good buying perspective. So around 28. So we're talking about from $26 to $28 is a good range to buy and sell anything above 28. But again, you're only getting $4. And this is the span of pretty much the whole year. So it's not even worth it to collect $4 for the whole year. It's not even worth it. Next up that I have, stock number 3, SMBC. Let's plug that in, SMBC. Let's look at the 1 year. Oh, not bad. And it's going down now. So I like that chart. Up, flat, up, flat. Then it went up a little bit. Then it went really up, and then it's going down again. So let's see where exactly. Southern Missouri. Okay. Now let's look at the dividends. They do have rising dividends. Any splits? They do. That's not a good sign. What was the last one? 2015? 12 years ago. I don't know. I would have to see this stock how it is in the open. An open market, open trading, open hours, pretty much. The market cap ain't too bad. 52-week high is pretty interesting. 52-week low, not bad. So that's a good range, a $30 range for that throughout the year. It's not bad. It's pretty decent, actually. Stock looks like it has been in an uptrend. And let's see, what else am I missing? So that's pretty much it. So now let's look to the charts. So it's gone up. gone up. So we're talking about 40, $46 range, 46. Yeah, around 40. Let's go with 46.70, 46.75. So that's definitely going to carry into next year and see how it goes. It might drop a little more. So SMBC, it doesn't look like a bad stock. This seems like a stock to be watch listed for now. But again, I would have to see how much activity and the volume is when it's open hours. So the next one, let's go to the next one. MRLN, Marlin Bus Services. Okay. Sounds like transportation to me, but whatever. Oh, the stock went up, then it went kind of flat. Okay. So they've paid 14 cents for like the longest. Any splits? No splits. They're in the banking industry. Yeah, I wouldn't touch it. I'd stay away from this company. There's no activity. It says they provide commercial equipment financing and leasing. Finances. Equipment include copiers, telephone systems, computers, and certain commercial and industrial equipment. How does that description belong to the banking sector? That just sounds so like before the 2000s. It just sounds like old technology or something. Doesn't even sound like it's in the banking sector. So anyways, yeah, I don't like the stock. Stay away from it. The last one I have FITBO, Fifth Third Bank Corp. I think I reviewed that last time actually, if I'm not mistaken. Unless it's a different class of shares. So they do lending, deposit bank. I've seen this bank actually in Florida. So this bank is a walk-in bank. It's a physical location bank. So they do also do consumer lending, wealth, and asset management. Okay. So let's look at the volume. It's okay, the 1 year. Let's look at the 5 year. That's not much range. Again, look at this stock. Not much range at all. Not a lot of range on this stock. I stay away from it just by looking at it. It paid dividends ever since 2020. Wow, 30 cents, 30 cents, 30 cents. No rising dividends. Any splits? No splits. So let's look at the chart for the 5 years. See, look at that. You pretty much broke even for 5 years. For 5 years. You don't want that. It's horrible. So there you have it. 5 stocks. Only one of them were okay to be watch listed. The other 4 were trash and pretty much broke even for the most part on all of them. So I hope you guys enjoyed this video. This was a shorter video. Stay tuned for the next one. And I don't know if at the end of the year or next year I'll do the special dividend stocks again. But for now, I'm going to continue the banking sector. So I hope you guys enjoyed it. Stay tuned for the next one. There's many more sectors to cover. But again, I still have so many more videos to do for this banking sector. So stay tuned and I'll see you guys in the next one. Thanks for watching.